Hey, Steve. So we just wrapped up our second quarter 2021 call. It's hard to believe that was our 75th consecutive call. Pretty amazing. So let's jump straight into the data. So let's talk about the combined market first. Some really fantastic results for the second quarter. The combined market was up 32% year over year. However, that was really against kind of a soft compare because, as you know, the second quarter of 20 was the COVID quarter. But actually, the compare is even better when you compare it to 2019. It was up 35%.
Yeah, you're right, Stan. Just an amazing quarter. And before we kind of get into the numbers, you're right. Celebrating the 75th is fantastic. And as you know, it takes a whole team to get us there. And we got to give a special shout out to Brett Breeding, who's done this for 75 straight quarters. Brett's been amazing with the data, the insights, and really brought us to where we are. Him and Nancy and Cynthia and everybody on that team has just been amazing. They make you and I look good. So, which is an easy feat for me at least. But talking about this quarter, it's been brilliant. I mean, regardless of the compare, it's an absolutely amazing quarter. We did 19.1 billion of ACV, by far the biggest quarter we've ever seen. And there were so many positive signs on accelerating managed services, expanding with ADM leading the way. BPO was way up. Engineering services delivered over 300 million of ACV for the quarter with just so many positives. And we had 76 billion. Let me repeat that, 76 billion of TCV signed in the last 6 months, which is just amazing. 24% higher year over year and 13% higher year to date. I mean, at this pace, I think we'll easily see over 150 billion of TCV signings this year. So here's a really cool chart I'd like to share just to really show how strong the quarter was. So as you can see with this, we kind of break out the total as a service market and the total managed service market. Both were up tremendously. So total as a service market was up 38% over year compared to Q2 2020, up 61% compared to Q2 2019. Managed services came in at 8 billion. 24% up on 2020, 11% up on 2019. I mean, there's absolutely nothing to not love about these numbers that we see right now.
So, Steve, let's move on to managed services, which came in at a very healthy 8 billion in ACV. That was up 24% year over year, again on a soft compare. But when you compare it to 2019, it was still up a really healthy 11%.
Yeah, it's funny because we were all prepped to say soft compare for everything on the big numbers. But the fact is, we've never had an $8 billion quarter for managed services in the history of the index. So not only is it up favorably against 2020 and 2019, it's 13% above our historic averages. So really the question to me is what's driving it? And I think I see three key trends, Stanton. I think there was some pent-up demand, or let me call it COVID hangover. And this was especially true in the BPO space, which was up 52% year over year. We wouldn't have expected that on the BPO side, and normalized is, it's sort of back to 2019 level. So you can clearly say pent up demand there. But digital transformation is really increasing the overall outsourcing. So this is where I think the entire pie is really growing. Financially, almost every industry was impacted by the pandemic, especially those industries that drive the outsourcing industry. So think of manufacturing, financial services, retail, telecommunications. Everybody was impacted, life sciences even to a large degree. And these industries are also accelerating their digital transformations, but don't have the same level of investment that they had planned for before the pandemic because their revenue was lower. So that means they've got to reduce their costs in other areas to fund these massive transformations. And just like we have always done, we turn to outsourcing to help do that. Third piece, apps are eating the world. From our perspective, this means apps development and engineering activities are really impacting more and more of the business. We're seeing increased spend across business units, shifted to managed services market, to drive apps, migrate apps to the cloud, connect microservices to the organization, and connect cloud native apps to legacy technologies. You take those three trends, they're all sustainable, they're all moving forward as we go forward.
So, Steve, as a service had its best quarter ever with over 11 billion in ACV, which was up 38% year over year. And as we talked about last quarter, we were confident this quarter we were going to break through the $10 billion mark, and we just blasted right through that and went straight to 11 billion.
Yeah, you're right. I don't know how many times we have to say it. I think everybody had their best quarter ever, right? I don't think there's more to say about cloud transformation than we've already said over the last 3 to 4 quarters. The growth is crazy. It's clearly driving the market. I think there was one number though that may have been missed on the index that to me was the most important number, and that's the increase of the as a service in EMEA. And what that really drove was cloud adoption, especially in the European markets. We saw a 500 basis point improvement in the percentage of total market share in EMEA. We were waiting for this to break out, and we think that by the end of the year, that number will reach 50%. Stanton, as you know, the Americas is already at 61%. Asia Pacific is almost at 75%. That really starts changing the dynamics of the deals once that number sort of breaks that 50%. It's really crossing the chasm at that point. And with Europe doing that, we're just going to see an accelerant for the cloud providers.
Steve, let's move to a half year compare now. So let's talk about apps versus infrastructure. ADM was up over 30% on a half year compare basis, while infrastructure was down 11%.
Yeah, this is the one area that I'm concerned about, Stanton. So infrastructure is concerning, and we talked about this the last quarter as well. And I think with the rapid shift to the cloud, the pure play infrastructure providers in the markets are struggling. Those with large data center assets are struggling. And even though we see cloud managed services, it still requires SI support. It's significantly less than the on-prem support. So we're going to see this big movement of spend from the traditional infrastructure providers really to the hyperscalers. And that's just going to be the continued piece. I think you had a special on this in your index a couple of weeks ago, which was quite interesting. So apps is clearly where the game is. We continue to see great numbers. Let me give you a perspective here. We saw 776 transactions in the app space this year. That's the highest we've ever seen and over 10% greater than the 5-year average. There was 6.7 billion of ACV awarded in the app space this year. That's over 40% above the 5-year average. I mean, this market used to be 3.4 or 3 to 4 billion per quarter for years. And with a few breakout quarters that there was a large deal. We've now seen 10 consecutive quarters with the ACV over 5 billion. It's just driving the new piece of the market, which really is also going to lead to more engineering and other things as we go forward.
BPO grew 48% on a half year basis, but was down a tick from the first half of 2019. So Steve, what I think is interesting here is the degree to which engineering services is growing. It was up over 300% on a half year compare.
That was amazing. I think it surprised all of us, even though that we knew it was coming to a large degree because we've seen the trend. And BPO did recover nicely this quarter. But again, I think my concern on BPO that it was really pent up demand and really driven by the huge growth in engineering services. So we saw 440 million of ACV in engineering services awarded this quarter, and 3 consecutive quarters now above 300 million of ACV. Again, unprecedented in the history of the index. I think the integration of IT and OT, analytics, smart industries, and other emerging trends are finally being funded at scale in organizations, and these organizations are turning to trusted partners to help them achieve their goals. You're going to continue to see this. We talked about industry-specific BPO as well. I think analytics is driving that market as well, and we'll continue to see growth there. Had a little bit of dip this quarter, but nothing fundamental that changed. I think there's just deal flow on that side.
Thanks, Steve. And just a quick reminder about the Index Insider. It's a weekly briefing on what's important in IT and business services in 5 minutes or less. And you can subscribe via the link below. And we'll see you on October 13th for the third quarter index call.
Great. Thanks, Stanton. And looking forward to catching up next time. For more details, please visit the ISG Index page on our website, www.isg-1.com.